Everyone, welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Time to brag a little bit about the growth of the company. If you look in the background behind me, it now says manages 45 million in assets under management. So pretty proud of that growth. I will say, looking back historically off to the side here, we closed out June was 38 million. The end of August and that was when I call this the Candace effect. That's when I hired Candace, was at the beginning of June there. So we grew to 38,000, 41 million. At the end of August, we were 44 million, which is just a few days ago. And now we just went over 45 million. So that's kind of the power of what I say is the difference between one person working on things versus two people. And just imagine as we continue to grow what we'll be able to do. As far as growth, initial capital raise, folks know I'm selling shares of the company. If you're interested, contact me directly. But the initial share sales went over 500,000. So have operating capital to be able to pursue different things to further the business and do things and better serve the customer, as well as potentially hire some more folks to be able to add to the team. So really proud of how things are going, and thank you all for being part of that. All right, as far as our topic of the day, it's going to be Apple. Apple released yesterday, and you know I'm an Apple fan. I got it. Make fun of me, call me an eye sheep, guilty. I'll buy whatever Apple comes out with, and except for the car, I don't know, the 2024 Apple car. That'd have to be pretty cool if you think I'm going to buy an iCar. But I say that now, I'll probably buy one. Anyway, but I'm pretty happy with the fleet I have right now. I don't anticipate changing anything, but you never know, right? But at least as far as the phones, there's the Watch Series 7 is coming out. I can't find my Series 3. It's in the house somewhere. So I'll definitely be buying one of those. I'll probably have to have an iPhone 13, because I need satellite capability. No, not because I need satellite capability, just because I kind of like having the latest and the cutting edge of stuff. But the point why we're talking about today is they just released that their Apple event is Tuesday. Let me get my mind straight here real quick. The 14th, I believe. So let me check real quick. So the 14th it's a Tuesday. Depending on when you are, it's 10 a.m. Pacifics, because that's where Apple's headquartered, right? So noon here where I am in Central Time frame. Sometimes I watch those. If you haven't watched one, it's worth probably 30 minutes of your time. Pretty good show. They get you all fired up. And of course, you just log in and start buying stuff, right? Because they got a pretty good, strong marketing team. But the point is from an investment perspective, is what is the stock going to do? How does the stock traditionally act in front of the annual iPhone releases? And we'll talk about that once we dig in a little bit. All right, question today is, what's a qualified charitable distribution? We're not to the end of the year yet, but I don't know if you noticed, if you're like us around here, we wake up and it's just like, holy cow, we're a third of the way through September already. Right? Year is moving fast. So the end of the year will be here before you know it. So if you do some charitable giving, there's ways to do it to be more tax efficient. So we're going to talk about that. All right. As far as the longs and shorts today, the futures are down a little bit. I don't expect today to be an update, but been surprised before. We're going to look at UPST long, not in love with it by any means, but there's a decent storyline out there. And then the shorts are PATH and PHM, Pulte being homes. Home has been on fire, obviously. So can we continue the pace of home buying, home creating, all of that stuff? Probably not. So the home builders, if you're in those names, I think it's probably time to take the profits and move on. All right, that's what we're going to talk about today. If you're catching us on replay, thank you so much for checking this out. Please subscribe, hit the notifications bell if you want to join us live. There's folks in the room. We have a chat window and a Q&A window that you don't see, and folks can ask me questions real time, and I will pontificate for you. Again, $25 a month if you want to join us. With that, let's go ahead and get started. All right, here's our lineup card for today, September 8th, Wednesday. Seems like a Tuesday, right? Because it's a short week, but it is a Wednesday. All right, there we go. Back up on camera. Standard disclaimer applies. It's a financial education presentation, so you have to do your own due diligence for acting upon anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, let's go and take a look at our mission objectives. We want to grow our money, protect our money, and live off our money. I tell you what, Apple does all three. And why do I say it does protects money as well? When you go to invest, if you don't do the individual stock thing, I get it. Listen in, be entertained. If it's not for you, then don't do it. But if you do partake in individual stocks, you need to be darn sure you are in the right ones, right? And that's the pain of individual stocks is people, if you get into individual stocks, you can inadvertently just by picking up your phone and the good idea fairy comes and lands on your shoulder because you read one article about some stock somewhere and you buy into it, right? No, don't do that. And it can get you into gambler's mindset. You don't want to be a gambler. You don't want to gamble. You want to invest. You want to make sure that you take your hard-earned money and you put it to work and grow that money. That's what I do for folks. So you do that through individual stocks. Obviously, one of the best ones that has been around and continues to be a place to earn your hard-earned capital is an Apple stock. Just because, it's got huge upside, but also it has kind of muted downside. Apple has a following that is cult-like. It's like Tesla. There's people, if you're in the Apple game, you are in, and you're not leaving, right? You buy something, you plug it in, put your Apple ID in it, and all of a sudden it's like you've had it for the rest of your life, for your whole life, right? It's got everything you need right there. And they're only getting better and smarter, and fitness and health and all that's coming in. I wouldn't be surprised if Apple opened a brokerage at some point because they could have your whole life right there in their ecosystem. You're driving their car, your money, you have the Apple card and all that. It's coming, right? The takeover until the government comes in and says, let's break things up. But even if they do, then you own a bunch of smaller parts of something that was awesome, which are probably individually going to be awesome. If they spun off Amazon Web Services, where their cloud component, Amazon, Apple Cloud, became its own little thing. It's like, people pay for it, right? It's online storage. You have all your stuff there. You don't have to worry about a little hard drive and you're sitting next to your computer anymore. Everything's up in the cloud. It's kind of amazing. All right. I shall shut up about Apple a little bit, but we'll pull the chart here in a minute after we go through the headlines, and we'll take a look at where the stock is. It's been on a tear lately, but it's not been in the headlines, right? So we'll look at that. All right. Question QCD, the flow, long, short, open, short, long. We'll do market review, headline review. We're going to look at Apple. We're also going to look at the SPY. UBS came out this morning and said any dip that is in the market will be temporary, and the market's going to end higher by the end of the year. Pretty bold statement in the face of tax reform. But again, if we don't have tax reform, the market screams higher. Contingencies and academic resources are standard. Let's take a look at TD Ameritrade ThinkPipes platform, which you see here with the 4 screens. This is how we're set up for our day trading. So we have our long here, and then we have 2 shorts over here. Let's take a look at the overall market, though. There's our S&P 9-month chart. Look at all those lines. They're straight. They're up. Up. Yeah, correction's coming. It's going to happen. Don't freak out. That'll be a buying opportunity. For folks that are putting money in now, I'm buying safe stuff like municipal bonds, yawn, 2% tax-free. I don't know, better than your bank, so put your money in. But seriously, not time to get super aggressive, in my opinion, because tax reform's coming. That'll get a sell-off. We'll transition from our non-aggressive stuff into aggressive stuff and then capitalize on the alpha from there, which is what we did in COVID. Remember, you made a lot of money in COVID, and you don't want COVID to happen, but certainly market sell-offs are opportunities to shift, move things around, and then make money. If you don't have it, then you just kind of ride it higher, and there's some risk there. All right, let's take a look at the 5-day chart of the market. So kind of chop last week and then selling off today, little chop. And I still think we're either chopping through the week or we're going to sell off a little bit during the week. Again, no reason to make any major moves. Just, I think that's what's going to happen. All right, let's switch back to CNBC.com. Take a look at some headlines here. All right, here we are back up to the top. You see the futures there, all a little bit in the red. Europe in the red across the board. Asia mixed with Japan up a little bit. Everybody else in the red. Bond world selling off a little bit. We touched 1.38 yesterday, I think. So just a little bit of a move down. Oil, again, holding above our 40 to 60 range. That's fine. Gold and silver basically not moving. Then the crypto sell off from yesterday was kind of amazing. So, El Salvador, the El Presidente says they're going to go to crypto. It's sold off. So they bought, I think, 19 million on day one. It sold off, and they bought another 50% yesterday. So anyhow, they had 400 Bitcoins. Now they have 600. Anyhow, they're all in, and that's their currency. And you know what? People are going to watch how that works. And if it works, I think you could see more maybe governmentally challenged companies. Don't be offended. Look, smaller countries that have some challenges with government. Yeah, I know we do too, but it could be the answer for them. And if it's the answer for them, it's going to be the answer for a lot of people. So stay tuned in the crypto world. But yesterday it was a sell the news kind of thing. All right, Chipotle street high. I'm not a Chipotle investor, but certainly the move back higher has been impressive. Here's the UBS S&P 500 target. Any pullback will likely lead to new highs. I will say this, and people don't get this. The power of money. When you talk about how fast a company can grow, and I'm one company amongst millions, but I mean, the power of money grows on its own. Everybody's out there making money, and they're saving, and they're investing, and they're doing the right thing, and they're reaping the benefits of a better, I will say not a better life necessarily, but more resources to fund a better life should money make a difference to you, which it does for most people. But you look at everybody out there and all the money that rolls into 401ks every single week, the company matches. I mean, it is an ocean out there. So these dips do not last very long. You saw that back in March 20. And again, I do agree that the tax reform induced dip will be temporary, but depending on how hard they swing the bat, it could be a while. All right. Netflix is so high, I just can't invest in here. And I think it's saturated, right? Who doesn't have Netflix? I don't know anybody, right? Or that has somebody else's password or whatever. But I mean, everybody has access to it. I mean, where are they going to sell it, export it to Mars or something? I don't know. All right, that is it. Let's take a look at Apple real quick. Here's the Apple chart, began a 9-month chart. So been kind of, boring, right? Just kind of Apple doing its thing. All right. Don't be surprised if Apple runs up into next Tuesday and then sells off. Everybody's going to be like, iPhone 13 is going to change the world. They're going to release an amazing product. They're going to show us the Series 7 watch, which will also be amazing. And then everybody's going to, the folks are going to pick it apart and blah, 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 crap talk Apple. And the stock tends to sell off after the release event. And then what happens? The stock sells off. People go online and buy, and basically the stock flatlines for a while until you get that earnings report, or Apple releases like, hey, we sold a billion iPhone 13s, and everybody's like, really? Yeah, and they're like, yeah, really? We're Apple, we sell iPhone. So the iPhone numbers will come out, stock goes higher, everybody, laughter and applause, and you move on from there. That's kind of the Apple thing. So love the fact that it's higher. That's exciting. Don't expect it to necessarily hold this level though through the event. That's my take. All right, it's time to go over for the opening bell. Let's go to TD Ameritrade, and I'll be back with you in just a few seconds. All right, good morning, everyone. Here is the opening bell for Wednesday, September 8th. Welcome to the On Time, On Target play of the day. You have 4 screens in front of you. On the left, you have a 1-minute chart. Here, S&P 500. We'll zoom in a little bit. You can see it's down slightly. We have for our long UPST, which picked up a sweet contract that was gapping up earlier. It's kind of fallen out of that gap, but now we're looking for that higher. And then our 2 shorts, we have Path, which had a price target cut because of mild growth. I do not know what they do. Lower volume, so be careful. And it's already gapped down 10%, so I don't like that as much as I like Pulte Homes. So the story here is, again, short, so we're going to zoom on this pretty close. You can see how far it's fallen. And you're looking at a 50-cent stop here. So again, we're going to let this go for a second. We want it to go higher. That's nice. And then we're going to take it back short with a 50-cent stop, maybe a 40-cent stop. We shall see. All right. But the story here is that the housing market's been on fire. You know that if you own one or trying to buy one, the prices have changed. So, all right, we're at, let's call it 50 at the top. So 49.60 would be the entry point. But the story is, can it continue? And even Pulte is saying, probably can't continue, right? There goes Path falling off. I expect the same thing in Pulte here in a few minutes once it establishes the high. So that's what we're watching, and we'll adjust accordingly. Plenty of volume, not a huge amount of volume, but plenty. We'll probably go with a tighter stop here. I feel comfortable going with the 30-cent stop just because it's not flopping all over the place. But I do, so that would put us down an entry point all the way down here at 49.70. So that's what I'm looking for. 30-cent stop in PHM short. I'm considering a 25-cent stop. It's pretty aggressive, but that way it doesn't have to go as far. Let's go with the 25-cent stop. So 49.75 will be our entry. And there it was. It just touched it. So we're going to be in the name. We're covering up at 50, which is high of the day. So as long as it doesn't beat the previous high of the day, we're going to be good. Here's our arrow to show which way we are taking it. So you can still get into it here, but again, adjust your R unit because that new high of the day is what will knock us out. So we don't want to be in it if it happens to flip higher here. All right, so we are in the PHM short, so 49.75 minus 25 is 49.50. So your exit point is all the way down at 49. So let's zoom out and draw that. So 49.50, 49.25 is our next one. That's the 2-hour point. And then all the way down here at 49 is the exit point. All right, so we'll zoom in on that. And there's your trade. So we'll monitor that while we're looking at some other things. I do want to look at Apple since I was talking about it. All right. I do have some covered calls, and if you do the covered call thing, I have the covered calls at 165. I really think 165 holds here in Apple. I don't think it's going to go above that in the next 3 months or so. I do think the event will happen next week, and then it will sell off from there. Not a tremendous amount, but sell off enough to not be 165 is not in play. All right, you see here we busted out on our trade. We went above 50, so you have to be out of that. If you haven't taken the trade, you could re-enter it here. You got to redo your own math, but we took the trade once, and we're only going to take the trade once, so we are back out. All right, another name we haven't talked about in a while is Luckin Coffee. Okay, and see why. You know that it's restricted trading here in the U.S., and then I don't understand how it can continue to power higher. But it's up at 15.6. Remember, we left in the 15 somewhere, so it's kind of back to where we sold out of it. So I'd be surprised to see it going higher. Actually, I need to make a call to Schwab on what's going on with how can this thing be powering higher if there's restricted trading, or is that just a bunch of hooey about the restricted trading? So we shall see. All right, switching over to charts. Look what's going up. Did I see AT&T's at the top of the leaderboard? Talk about a sign to like cash out and go home. That's kind of scary. So AT&T is the top of the leaderboard along with Energy, Mineral, local Austin firm here. Got Visa, MasterCard, Clean Energy. Not all. Look at DraftKings in there. Not all that many names are in the green here. So let's switch over to red. All right, NEO did a huge stock offering. So they're looking for operating capital to, what did they say, strengthen their balance sheet and then be able to produce more cars. Again, I've liked the NEO name. We haven't looked at it in a while. But when you back this chart out, you'll see, I think it hit 80. Oh, no, 60, 69, 67. Okay. So anyhow, it had a huge run up. For those that are in it, we're in it at the $5 range. So, I mean, it's literally been on fire. Sold off since that, kind of set the bottom here around in the mid 30s or so. And that's where it is now at around 38. So long term, love NEO. Again, it's been hit by the Chinese government sort of thing. So is Didi, which you also see right here, which I think is a must-own stock. Holding below 10, it was down here in the 8 range. We kind of loaded up. So, we'll see. Stories yet to be told on these Chinese stocks. They're coming back. It's just how patient can you be? My patience is longer than most. That's what makes me good at this. But Alibaba, K-Web, all those names are in the red and have all been a house of pain. But I think payday's coming. That's why I'm in them. All right, let's go back over to Google Chrome here. We'll switch to qualify, how to reduce your taxes by giving to charity. All right. Giving to charity is a personal decision, whether you do it through church or politics or healthcare causes, whatever you decide. Some qualify, some don't. Most of your political stuff does not qualify under a QCD rule, but all of the healthcare stuff does. I'd say all of the veteran care stuff does. So, church is a little bit tricky. You'd have to see if it qualifies or not. Kind of depends. But if you want to try to give to charity, if that's your thing, then before you just start writing checks to people, figure out how to do it tax efficiently, right? And that's what this is about. So QCD means if you have an IRA and you donate to charity, you do not have to pay taxes on that money. So remember, a traditional IRA, when you put money into it, whether you went through your 401k or whether you did it as an individual, you put money in and you get a tax break on that. Well, so that money's never been taxed. And then of course your goal is to grow the crap out of it, right? For 20, 30, 40 years while you're in the workforce. And then at the end, you've never paid tax on this huge chunk of money. And then that's where they get you, right? So they give you a little bit of a break up front and they get you at the end, but you can up to $100,000 a year. Now, don't be crazy with giving away your money, depending on your personal financial situation. But if you have the money, you can do your donations and make them tax free. So you don't have to pay any tax on them. So must be paid directly to the charity. That means a check has to be written from, in our case, Schwab. For those that are with me, right into the charity. So you can't touch the money. The money doesn't come to you and then there. It has to go direct, which is important. Who can use it? Again, if you're 70 and a half, and I think some of these the QCD rule stayed at 70 and a half where RMD went to 72. I think RMD through the next tax law, we'll go to 75 before you have to start taking it. So we'll see. But make sure you're eligible. If you're not working with an advisor, you need to, then your own advisor, you need to do some reading and understanding before you step into this realm to make sure you follow the rules. All right. Or just read this article. It looks pretty thorough, if you will. So the bottom line, lower your AGI in retirement. Again, in retirement, you're generally looking at your pensions, your Social Security times 2 if you're a couple. You're also, if you have any traditional pensions, that's being taxed as well. And then if you have annuities coming in, you may be getting taxed on that money. So there's a lot of money coming in. So you also want to be as tax efficient as possible. All right. And, shout out for working an advisor. The advisor will find those angles for you, as well as CPAs will find those angles for you. And they generally save you more money than you're paying them. So kind of a win-win. All right. That's all I've got for today. Thank you so much for listening in, and we will see you back tomorrow. Bye.